Welcome, friends. In this edition on the live revisionary classes scheduled for the paper that is for the September 2025 examination for the final level, ICAI Ashish Gupta, Joint Director, Board of Studies, welcomes you all. Now, student, today we are starting with this session of the paper Advanced Financial Management, that is paper number 2. So, student, I hope you must have gone through the related recorded lectures from our previous sessions available. Now, the purpose of this revisionary session is that whatever you have gone through in the recorded session, we can discuss any issues or any doubt coming out of it. And in addition to that, we will revise in a very brief and crisp manner that has been covered in our recorded session. A student, if you have any doubt out of this session, you are free to ask here. As well as, of course, I will share my email ID and telephone number with you so that you can discuss later or at later part as well. Now, student, when we talk about this revisionary session, now since September is there is a time gap in the September examination. So my request to you, please prepare thoroughly, and whatever your doubts are there, please clear just now. Because if you keep this doubt pending for some time, then the concept you will not able to understand the concept, and ultimately it will result in a confusion. So, student, let us start our discussion on the today's session. And today's we are taking two topics of the paper Advanced Financial Management. Now, the topic one is there. Okay. Of course, student, and this is relating to your corporate strategy and financial strategy. And then there is another topic that is relating to basically the first topic name, if I tell you, it is called financial policy and corporate strategy. Okay. And second topic of it is a risk management. So today's session, we will cover discussion in both of these topics. And these topics are, of course, these are normally primarily said that these are theoretical oriented. But please remember that there are some numericals coming out of this topic as well. Now, when I will start discussing on this topic, so wherever required, I will discuss with you the theoretical aspect as well as the numerical aspect. Okay, student, I hope you must have downloaded the assignment available for today's class. These are some additional questions. Okay, we have framed for you, and in this there are two case scenario questions are two case scenario form. We can say case scenario form. There are two case scenarios are there so that you can understand the concepts very well. Okay, student. Now let us discuss the today's topic. Now, when we talk about the topic of corporate strategy, okay, so before we corporate strategy, what we have covered in our first class, we have given you an overview of the syllabus. Now, when we talk about our syllabus, we have divided the syllabus in about 6 sections. Okay, so our section one. Okay, so we have divided our syllabus into various sections. Now, when I talk about section one, basically it covers our three topics. First is that I today that will cover financial policy and corporate strategy. Okay, then another is risk management that will also cover today. We will discussion our discussion, and third is advanced capital budgeting decision. Okay, student. Now, if I talk about this topic, advanced capital budgeting decision, this is an extension of the capital budgeting topic that you have discussed at your intermediate level. And the estimated weightage is carrying overall 8 to 15%. Okay, now student, this percentage is normally a criteria so that the paper is evenly distributed, topics are evenly distributed. Okay, sometimes there may be slightly variation in your examination. Now we come to section two. It consists basically we can say it is a security. Another 1 second. It is basically a security analysis oriented section, or we can say here we carry out the analysis of the securities. So first we comes out with the topic number four, that is called security analysis. It covers fundamental analysis, technical analysis, efficient market hypothesis, and our efficient market hypothesis, and even there's some tools that I haven't also covered, or we can say technical tools to carry out the equity analysis. And then it is a security valuation, which covered the mainly topic covered bond valuation. Then it is a portfolio management. Okay, so this cover about the 20 to 30% of overall paper. Now, anything, please remember, students, it is not always necessary that only the theoretical question, only numerical question will be asked from any particular chapter. It is very important to remember that any topic can be asked from theoretical or numerical can be asked from any topic. Of course, securitization, like startup finance are papers where topics are there where normally only theoretical questions are asked. Now we are coming to section three. Okay, the first part is that is chapter number 7, securitization. It is quite theoretical oriented topic. Then it comes the mutual fund. Then it comes the derivative analysis and valuation. Okay, this topic covers 20 to 30%. And very important, this topic is derivative analysis is very important. Because reason is that here the concept of basic concept of derivative has been covered, and that will also be equally applied in the forthcoming chapter on the foreign exchange exposure and risk management in interest rate risk management. Because when we talk about the derivatives, derivative means deriving some value from some underlying. Okay, so this underlying can be rupee, it can be foreign exchange, it can be your interest rate, it can be index, it can be stock, or it can be weather as well. Okay, so this topic is very important. Okay, theoretical as well as numerical. Of course, numerical questions are normally more asked from this topic. But my request to you, please go through this topic in very you can in-depth manner, or not that much in-depth means you should have a conceptual clarity on this topic. Okay, then we come to the section 4. Now, when we talk about the section 4, it is a kind of a risk management section. Okay, in this section, The topic is first foreign exchange exposure, and risk management. Then the topic of international financial management. Now, when I talk about this topic of international financial management, we can say that it is a combination of foreign exchange plus, you can say, simple capital budgeting, or we can say not we can say capital budgeting. We can also say, or we can say that it is a kind of a financial management. Okay, foreign exchange plus financial management. When we talk about the financial management, only three. Of course, there are four decisions are taken. Okay, like, or we can say it is a kind of three major decisions are taken: where to invest, how to finance, and how much profit we have to distribute. Okay, that is capital budgeting. Okay, long-term capital budgeting, inclusive of working capital management. That is a separate part. Then there is a cost of capital or capital structure. That is how we should finance our all the spendings. Okay, then we comes to the final question that whatever the profit we have generated, then how we should distribute this profit among the various stakeholders. Okay, so similarly, when we take the international aspect, like say, if any company is investing in any company, Indian company is investing funds, investing money in outside India. So of course, the financial management basic technique of capital budgeting will be applied there. But here, the foreign exchange aspect will be equally important. So that's why it is called international financial management. Similarly, if any company have a subsidiary all over the world, okay, so they may have to carry out working capital management there. There, it will include like inventory management, okay, supply chain management. Then it will include your receivable management. And one of the very important aspect of international financial management is treasury management. Because what happens, see, we have to see, we have to analyze we have a excess funds in a one country where we are having a lower rate of interest, whereas in the other country where we have a shortage of funds and we are having a higher interest higher interest rate there. So what we can do, we can transfer our surplus funds from the lower interest generating country to the higher interest generating country. So this will also covered in this section. So all these are covered here. And the next part is interest rate risk management. Generally, these are relating to your, see, when the company borrows the money, okay, they have to see from where uh, we have to hedge our interest rate, because see what happens. Interest is a kind of a thing, because when we start borrowing, if you have student heard the term name of LIBOR, but LIBOR is no more there. Now these are called are some benchmark rates like MIBOR, LIBOR. Now there are like rates are SOFR, okay, Euribor. And these rates are new rates are there. So now what happens? Generally, companies borrows the fund or lend the fund as per your floating rate of interest, and for this they use the benchmark rates. When we use the benchmark rates, they keep on changing. So the company wants to hedge themselves up to from this rise or fall in the interest. Say lender will like to hedge itself from the falling interest rate, whereas a borrower will like to hedge itself from the rising interest rate. So all these techniques are covered there. There are some techniques like forward rate agreement, futures, interest rate cap, the floor, everything has been covered here. So this section will cover around 20 to 25%. Now next we come to the section 5. Okay, this section is basically consisting of very strategic, very important from point of view. This consists of business valuation. and then it comes to merger, acquisitions, and corporate restructuring. Okay, so now here it is very important to note that see, today's time is merger acquisitions time. Okay, of course, we can say that this spate has been of merger acquisition has been started somewhere around 2005, 6, 7, some 2005, 6, 7, because at that time some major companies has started acquiring the companies like Mittal Arcelor has acquired very one of the very major acquisition. Okay, after that Tata has acquired Tetley, and then Tata Chorus deal is a very discussed deal because here the concept of leverage buyout has been used. Okay, so after that we can say that in India as well, of course, the merger and acquisitions practices going on Western world very from very old time, but in India we can say it has catch hold somewhere around of post 2005 6. So after that, the companies have started. Indian companies have started acquiring foreign companies. So now, when we talk about merger acquisitions, the concept of business valuation is very important. And now you know that there are some courses on the business valuation. Now the valuation is also becoming a very important part for the curriculum. We can say for the from the job prospects for the chartered accountant. So the security valuation topic, that is chapter number 5, as well as this chapter number 13. Now these both topics have become very important from the career perspective as well, because now the CAs are going into the valuation profession as well. So this topic carries somewhere percentage around 10 to 15%. Okay, now next we come to the section 6. That is last section. That is startup finance. Okay, this is theoretical denominated topic. Now, startup finance is basically, of course, today's time, startup is a very fancy word. And even if talk with any very toddler, so he may be not known about the startup. What is a startup? But they know that startup is a new kind of or we can say latest trend in the latest in trend, or we can say it is a kind of a business model now. It is trending now. So the days are the gone when we used to, when we in our earlier time, when we used to have a business enterprise structure in our mind. We used to start with some sole proprietor, then coming to partnership, then from partnership to limited liability company, then public company. So this kind of a, we can say that it is a kind of a growth start was used to be there earlier, and it is used to be studied or it is used to be taught. But now the time has changed. Now the company or the any young generation are coming out with the idea, and they are starting up their venture in a form of a startup. They are getting the funding. Okay, the funding can be first stage, second stage, seed funding. So all these have been covered here in this chapter. So with this, we come to the closer of the part of the syllabus discussion. If you have any query, you can send it query through the our query handle, or you can even ask us through the chat as well. Let me check. Any query has no. Okay. Now I will continue. Okay, now we come to the first topic, chapter number 1. That is discussion today's part. Okay, of course, we have discussed about the various theoretical topics. Okay, in addition to that, there are three important topics that are important from not only from the theoretical point of view, these are important from the numerical questions point of view as well. Okay, when we talk about chapter number 1, the chapter is your financial policies. and corporate strategy. Students, you are requested to ask your queries. ओके प्लीज थ्रो चैट बॉक्स। और स्टूडेंट्स आप लोगों को मैं रिक्वेस्ट कर रहा हूँ, आप अपनी क्वेरीज पूछ लीजिए, कोई इसमें झिझक नहीं कीजिए। ठीक है, जितने आप डाउट यहाँ क्लियर कर सकते हैं आप कीजिए। ऑफ कोर्स लास्ट के 15 मिनट के सेशन में हम सेशन अपना ओपन कर देंगे, जिससे कि स्टूडेंट्स अपनी वर्बल क्वेरीज मोड में भी कर सकते हैं। स्टूडेंट, जब हम पहले चैप्टर की बात करते हैं, यह चैप्टर थियोरेटिकल एज वेल एज हम कह सकते हैं न्यूमेरिकल पॉइंट ऑफ व्यू से भी बहुत इंपॉर्टेंट है। तो स्टूडेंट, जो हमने टॉपिक 3 टॉपिक हमने यहाँ डिस्कस करे थे जो न्यूमेरिकल पॉइंट से भी इंपॉर्टेंट है। दीज आर टॉपिक्स ऑन इंटरनल ग्रोथ रेट, स्टूडेंट इस टॉपिक के बारे में, एक्सटर्नल फंडिंग रिक्वायरमेंट के बारे में अगर हम अपना रिकॉर्डेड लेक्चर में देखेंगे तो उसके बारे में यह कहा गया है कि यह हमारे स्टडी मटेरियल में डायरेक्ट मैनर में कवर नहीं किया गया है। लेकिन हमने जो रिवाइज एडिशन निकाला हुआ है और जो एडिशन आप रेफर कर रहे हैं उसके इस टॉपिक के बारे में उसमें एक्सप्लेनेशन है। स्टूडेंट प्लीज नोट दैट although in our recorded lecture we have said that this topic of external funding requirement has not been covered in a direct manner. Okay, but in the revised edition that is meant for your September 2025 examination, the topic has been covered very well. Okay, so you can refer this topic from there as well. So so it is very important, one of the very important point to note, and that's why I have discussed with you. Now when I talk about the internal growth rate, okay, what is internal growth rate? Somewhere it is a kind, we can say that it is that growth rate that can be achieved without any external help or external funding. Because see what happens, we have our internal reserves. Because when we talk about undistributed profit, what is this undistributed profit? Because it is a kind of a plowing back of the profit, a portion of the profit that is plowing back in the business. Because whenever we distribute, we earn the profit. Okay, profit means net profit after tax. Okay, or we can say that PAT. So it has a two portion. Okay, one is dividend. Okay, of course, this dividend is for the preference dividend as well as for the equity dividend. Now, when we talk about the preference dividend, you know that it is a fixed kind of a dividend, whereas for the equity dividend, it normally varies. Okay, once the a portion is distributed in the form of dividend, the other portion is retained earning, and it is plow back in the business. When it is plow back in the business, then question comes, what will be our growth from this fund? So because earlier we are having some our financial structure there, or we can say our financial resources are there, but with this addition, some growth will be there in the business. Now question arises, what will be growth in our business? So simply we say that first we compute our ROE, that is return on asset. Yes, is asking, my voice is not clear if I am writing on writing. Ashok ji, Ashok ji, now this is
सर
ये वॉइस क्लियर नहीं आ रही क्या मेरी, क्या जब लिखते
कभी
ना?
कभी मैं बताता कभी फंस जा रही है वो।
अच्छा, कट रही है वो।
यस सर।
चलो आई विल ट्राई, मैं देखता हूँ एक बारी और। ठीक है,
यस सर।
अभी मुझे बता
आपका
देना एक
माइक,
बारी। ठीक है,
आप लिखने
अभी
के
ठीक
टाइम
आ
पे
रही है सर।
ठीक है
से
ना?
दूर
ओके,
जा
नो
रहे हो
प्रॉब्लम।
शायद।
अब मेरी वॉइस ठीक है जब मैं थोड़ा ऊपर करके बोलता हूँ तो?
यस सर।
ठीक है, चलो। Now this is the net profit margin. I think Prithviraj, if voice is not clear, then please go again, send your chat message. Net profit margin, okay, into asset turnover ratio. Okay, so we can say that now we compute IGR, that is internal growth rate, ROA into plowback ratio. Plowback ratio means what will be our portion will be uh, okay student, if the voice is there then अजीत,
यस सर।
मैं एक मिनट कैमरा ना फिर उस पर दे रहा हूँ मैं। ठीक है, अगर वॉइस क्लियर नहीं आ रही ना
यस
जैसे
सर।
बता देना। ठीक है, एक मिनट रुकना।
ठीक है सर।
सर अभी क्लियर आ रही है, इससे बात कर रहे हो ना तो अभी क्लियर आ रही है
नहीं
सर।
प्रवीण जी कुछ ना वॉइस में है इशू।
तो मैं
सर
चेंज
माइक
कर
भी
रहा हूँ
थोड़ा
मोड।
प्रॉपर
ठीक है,
एडजस्ट कीजिए।
अशोक जी अब देखना मेरी वॉइस अब क्लियर है? ठीक है, ठीक है, मैं इसको चेंज कर देता हूँ। Okay, now we come to IGR, that is really return on asset into plowback ratio. Now, what is this plowback ratio? Student, I hope now my voice is clear. Still, if there's any issue, please do let me know. Okay, then I will find other way out around. Okay, now it is what is plowback ratio? Now, plowback ratio means 1 minus D, that is a portion of the profit that is distributed and the leftover is retained. So that is called plowback ratio. Okay, student. So ultimately, we compute this formula, and by this growth rate, we will achieve the growth. Now, in some of the books, there is another alternative formula is there. Of course, I am discussing with you, but that is not that much in use. In examination, even you can give alternative answer as well from this formula as well. Okay, student. So now this is a very simple. If we see the simple logic, we can say that if we are earning some amount of profit from some investment, or we can say return on asset. So if we plow back our a portion of profit, so this will be our ultimately growth at which we will our business will grow. Okay, now there is another concept that is called sustainable growth rate. Now, in our IGR, when we were calculating IGR, there was very crucial assumption that we will not use any external funding. That is a very important. Okay, I can say here, right, in another ink, no external funding. Strictly, because what we are using, it is our internal profit. Now, here, when we talk about sustainable growth rate, now it says we relax the assumption of external funding but our condition is that we will not issue any additional equity. Okay, what we will do, whatever profit has been come to what we can say, whatever the proportion of the profit, or whatever is the amount of profit that has been plowed back in the business, in the same proportion, we can say we can increase our debt proportion. Okay, or we can say that we want not issue any equity, but we will issue some amount of debt, or we will take some long term loan. So because see what happens when we take some loan, our amount of funding will be increased and our growth rate will be quite higher. Okay, so we can say that additional funds can be borrowed, okay, without increasing financial leverage, that is debt equity ratio. Okay, because we say that our capital structure will remain the same, there will not be change, and we will borrow amount to a certain amount level only, that our capital structure does not affect it. Okay, and some of the assumptions we have covered, like no change in capital structure, we can say that. Okay, maintain target payout ratio. It is very important. Normally, what happens in a company, the company may have a policy that our 30% will be profit will be distributed, whatever it is. Okay, some company may have this kind of a policy. Okay, student. So this is the case where we see that, of course, we can take the benefit of more growth by applying by taking borrowing some money in the form of debt. Okay. Now, question arises: how we compute this ratio? The formula is SGR is equal to B means
Sir,
yes, yes,
excuse me, sir. Could
yes.
you please increase the mic volume?
Pardon?
Mic volume increase, please.
Acha, okay, okay. अशोक जी वॉइस कम आ रही है मेरा?
हाँ.
और सर सही जा रही है।
I think
हाँ,
बेटा
आवाज
if
तो बराबर
possible.
आ रहा है.
Yes. Parveen, you want to say something बेटा?
Voice is clear now.
It's clear now. Okay.
Okay, sir.
Beta, I think you increase the volume of your volume. Okay.
Okay. Okay, sir.
Okay. Okay. Okay, student. So now, what is this B? It is basically 1 minus T, that is T binary. Okay. Now, what is this ROE? Okay, ROE means return on equity, where we have considered here ROA, that is return on asset. Here we are using ROE, and for this ROE, there is one formula that is called DuPont model. You have discussed this model, you have studied this model at your intermediate level. Okay, this model is like that: profit ratio into asset turnover ratio, okay, into equity multiplier. Okay, accordingly, what is if I say that now I can say like this: profit after tax divided by sales into sales divided by total assets into total assets divided by equity. Okay, what we do? We start crossing it like total asset with total asset, sales with total sales. Ultimately, the profit, the figure comes profit after tax divided by equity, and that is called ROE. Okay, so when I apply my ROE, multiply with this, okay, my growth rate will be more. Okay, now you see the difference, student. Why my growth rate will be more? While in the denominator, I am using this equity value for ROE, and for ROA, I am using, we can say, net profit divided by total assets. Now, this total assets, a portion will also be inclusive of debt financing as well. So, of course, my figure of equity will always be lesser than my total assets. Okay, so that's why it will always be on a higher side. So always the sustainable growth rate will be more than equity. Sorry, not from sustainable growth rate will be more than our internal growth rate. Okay, student, it is clear now. Sorry. Okay, now I mean coming. So there is another formula as well. SGR like IGR, there is another formula, same version, ROE into B, 1 minus ROE into B. There is another version also is available. Okay, student. So I hope these the both concepts are clear to you. Of course, there are one or two numericals are there. Some numericals are in your previous assignment as well. And today we will also cover some numerical here. Okay, now let us, I am coming to next topic of external funding requirement. Now, students, please see in earlier two topics. Okay, Shweta is Ajmer is asking, sir, please move to previous slide. Is it clear now better? Okay, now students, please note that in our this discussion on IGR and SGR, what we are doing, we are estimating that this much of profit we will plow back, okay, or we will say some taking external funding, so this much of growth will be there. Now, sometime what happens? There may be some growth in the business as well automatically. Like for example, if a company is having any leverage, or we can say that edge over the products of the other companies, so your business is likely to grow at a higher speed than your IGR, SGR. Please note that it may be possible that your company may be rising by a higher growth rate than that is IGR and growth your SGR. Then in this case, what happens? You have to you can say cross the your or you can say you have to ignore the restriction that I will issue additional equity. Okay, now I give you very in a very orderly manner. I explain you. When I talk about my IGR, no external funding in any form. Whatever internal generated funds, those are plowed back. Okay, now when we talk about SDR, we are relaxing our condition that of course I will take some funding, but I will not take any external equity or any additional equity will be issued. Only some known amount will be issued. Now, when I talk about external funding requirement, I cannot restrict my growth. The growth is in my business automatically. It is coming. Only just I have to capture it. For capturing it, it may be possible that I may have to ignore the condition that I have imposed while calculating my sustainable growth rate, that I will not issue any additional equity. Here, I will issue equity as well. Okay, so I can say that when I talk about external funding requirement, the growth is inevitable in my business. Suppose ये देखिए स्टूडेंट्स, मैं आपको उसको समझाता हूँ हिंदी में, थोड़ा सा आपको बता देता हूँ जिससे आपको और क्लियर हो जाएगा कि जब हमने इंटरनल ग्रोथ रेट की बात करी तो हमने ये कहा कि हमने कोई बाहर से पैसा नहीं लेना, हमने जो लगाना यहीं लगाना है। तो उससे क्या होता है कि जो हमारा इंटरनल जनरेटेड फंड है उसी को लगाएंगे। जब हमने सस्टेनेबल ग्रोथ रेट की बात करी तो हमने क्या कहा कि हम बाहर का भी फंड ले लेंगे, लेकिन बाहर का हम इक्विटी इशू नहीं करेंगे। हमने डेट वगैरह इशू कर देंगे थोड़ा बहुत, लेकिन हम इक्विटी इशू नहीं करेंगे। लेकिन कई बार क्या होता है कि बिजनेस में ग्रोथ आनी है, हमारा प्रोडक्ट चलना है, तो हमें क्या है कि हमें ग्रोथ रेट आनी है, तो हमें ग्रोथ रेट को कैप्चर करने के लिए हो सकता है वो कंडीशन जो हमने सस्टेनेबल ग्रोथ रेट में लगाई है कि हम बाहर की हम एक्सटर्नल इक्विटी और एडिशनल इक्विटी नहीं इशू करेंगे, अब हमें उसको इग्नोर करना पड़ेगा। ओके, बट sometime what happens, okay, Amuda, of course beta, I am making the lecture in English, but don't worry, whatever I have covered in English, only that time I am just speaking in Hindi. Okay, no portion I will cover in Hindi that has been not covered in English. So please don't worry, you will not leave any, or you will not you can lose anything. Okay, there will nothing topic will be or anything will be there that is not covered in English. Okay, everything covered in English as well. Okay. Okay, student. Now, see, when I talk about this external funding requirement, I have crossed my section. But sometime what happens, I will determine my amount. Okay, this much of amount, say my business is likely to grow by 15%. My sale is likely to grow by the 15% in the coming year. Now, question rises, I have to increase the base of my assets. Okay, I have to increase the base of my asset base. Now, when I have to increase the base of my assets, this can be our fixed assets, this can be current assets, or every asset. Okay, of course, if I say that I have to increase the base of my current assets, then of course a part of it's automatically financed by my current liabilities. Because working, whenever we talk about the term working capital, a part of the current assets is spontaneously financed by my part of the working current liabilities. So that's why if my current assets is increasing, generally it is presumed that my current liabilities are increasing as well. Okay, sometime some assets may be not changed. So these conditions that we have to see. Otherwise, it is always presumed that all assets are increased. Okay, when all assets are increasing, my current liabilities are increasing. So balance of amount, I need money. Balance of fund, I need. When I need fund the more money, what I have to do? I have to see. I will see more assets. Okay, minus spontaneous finance. So this much of amount I require. Okay, now when I require this amount, I can issue in both debt as well as in equity form. Okay, so this part is called external funding requirement. Now I have to see how much I have to borrow. Sometimes there may be some conditions, like the investors or some lender may says that, okay, you cannot borrow more than, you cannot cross your debt equity ratio. Something conditions may be there. Okay, so that's why now debt and equity, this will be in form. Okay, a part of the equity shall be in the form of retained earning as well. Okay, so if I exclude my retained earning, the balance amount will be fresh equity. ओके, स्टूडेंट आप इस बात को ध्यान दीजिए कि जब हमने कहा कि एक्सटर्नल फंडिंग रिक्वायरमेंट है, क्योंकि एक्सटर्नल फंडिंग रिक्वायरमेट क्यों हो रही है, क्योंकि जब हमने बिजनेस को ग्रो करा तो हमारी असेट्स की जरूरतें बढ़ेंगी। असेट्स दोनों फॉर्म में होती हैं, नॉन करंट असेट्स, करंट असेट्स। हो सकता है सारी असेट्स बढ़ रही हैं, कई बार होता है कि फिक्स असेट्स को हम छोड़ देते हैं कि भाई उसकी जरूरत नहीं है बढ़ाने की, करंट असेट्स डिपेंड करता है कंडीशंस पे। करंट असेट्स बढ़ रही है तो नॉर्मली ये माना जाता है कि करंट लायबिलिटीज भी बढ़ेंगी, और जैसा कि आप जानते हैं कि करंट लायबिलिटीज एक हमारा स्पॉन्टेनियस, यानी कि जिसमें हम कोई एफर्ट नहीं करते हैं और वो स्पॉन्टेनियसली अपने आप फाइनेंसिंग करता है, तो हमें क्या होता है कि उसका बेनिफिट मिलता है, और जो नेट अमाउंट बढ़ती है, क्या वर्किंग कैपिटल होती है, उसी की वही उसी में इंक्रीज होता है। तो हमें वो दोनों और जो कैपिटल ये फिक्स असेट्स है दोनों में इंक्रीज मिलाकर हम उसको, हमें उतनी एक्सटर्नल फंडिंग रिक्वायरमेंट चाहिए। अब एक्सटर्नल फंडिंग रिक्वायरमेंट चाहिए तो हम उसमें क्या करते हैं, डेट और इक्विटी। समटाइम क्या होता है कि हमें कोई लेंडर्स वगैरह कह सकते हैं कि आप अपनी डेट इक्विटी रेशो क्रॉस नहीं कर सकते, तो हमें उसके अंदर यह देखना होगा कि हमें क्या अपना मीट करना चाहिए क्राइटेरिया। इक्विटी का एक पोर्शन हमेशा रिटेन्ड अर्निंग माना जाएगा, तो बैलेंस हमको क्या मानते हैं, फ्रेश इक्विटी। ओके, व्हाट इज अ स्पॉन्टेनियस फाइनेंस? अभी अब्रकेश सर, spontaneous finance means, say, I just give you a very simple example. Now if you are a shopkeeper, okay, if you are a shopkeeper, so see what happens. Some of course normally what happens, of course, in it maybe some or I just take example of in a shop in a very simple your locality. Now if you go there and say कि मैं तुम्हें पैसे कल दे दूंगा, I will give you the money tomorrow, or say after 15 days. So when the shopkeeper is selling you goods on the credit, they are the receivable or debtors are creating. Okay, so this will come on their asset side in a form of debtors, that is under the heading of current assets. Of course, your money is blocked. Okay, your money is because the money has not come to your to your treasury, और तुम्हारे गले में कैश नहीं आया है, 15 दिन तक नहीं आएगा, 15 दिन के बाद ही आएगा, आपका पैसा 15 दिन फंस गया है। लेकिन आप मान लीजिए, प्लीज एज्यूम दैट आफ्टर the supply that you have supplied to him, or the goods that you have supplied to him, you have also taken it on the credit. Okay, so accordingly आपने क्रेडिट लिया है 1 महीने का, और उसने आपको क्रेडिट, उसने आपसे 15 दिन का क्रेडिट मांगा है, तो अल्टीमेटली जो क्रेडिट आपने लिया है वो आपके पेबल में आ जाएगा, तो वो स्पॉन्टेनियस आ जाता है, वो एक बिजनेस प्रैक्टिस होती है, एक मार्केट में होता है। ओके, नाउ इट इज क्लियर टू यू, थैंक यू सर। Now here, now when we talk about the external funding requirement, we have covered two approaches. Okay, one is analytical, another is formula based approach. Okay student, if we should see that this formula or analytical approach both are the same, only small difference, a formula has been created only for the sake of convenience, otherwise it is completely logical based. Okay, generally here what we do, various figures are changed and pro forma balance sheet is prepared. Okay, keeping the balance, or we can say that like, okay, and the balancing figure will be our EFR. And balancing figure will be EFR. Okay, that has been discussed in the question where it has been discussed in very detail, so I'm not covering here because time is very limited. You can refer the lecture, it is very beautifully covered in detail. आप स्टूडेंट उस लेक्चर्स को देख सकते हैं, उसमें पूरा बताया गया है कि जब आप एक परफॉर्मा बैलेंस शीट बना दीजिए और जो बैलेंसिंग फिगर होगी वो आपकी एक्सटर्नल फंडिंग रिक्वायरमेंट होगी। ओके, नाउ देयर इज अ फार्मूला बेस्ड अप्रोच in this formula, okay, now if I just explain you this formula, this is nothing a formula, it is a very purely logical. You know, see, students, very important, I want to discuss with you. It is normally said that there are many formulas in AFM, but please believe me, hardly there are two or three formulas. Okay, like Black School's models or minimum portfolio variance, computation of weight. Only two or three formulas are there. Otherwise, everything based is on your logic. Okay, so my request to you, please don't go by any formula sheet, etc., formula book, because it is AFM is purely logical based. Of course, there is a logic behind this all formulas, but they are too much logic, or you can say mathematical calculations are involved. So that's why I say you can cram this formula. Otherwise, there is no other need of cramming any other formula. Now, student, please see here. Here, this is the increase in the overall assets. Okay, so see in a formula, what we do, we normally take in a formula, we take a overall increase, but sometimes there may some conditions may be there. These assets may be current as well as non-current. Of course, current assets are always presumed they will increase. For fixed assets, there may be some condition. Okay, this is our liability. Generally, it is our non-current liabilities. It is always in non-current liabilities. Consider it is all sorry, my mistake. It is current liabilities. Sorry, because it is a current liability means because it will be automatic, spontaneous. Okay, spontaneous. Okay, so one part of your asset increase is financed by your this liability increase. Okay, and another, this is your retained profit. Okay, M is your profit multiplier, that is net profit ratio. This is your revised sale, and this is your retained earning. Okay, so overall, this is our external funding requirement. Okay, student. Now I think it is clear to you. I have even in my session, what I have done, I have shown it by one way of one diagram as well. If you see, sir, student, please also thoroughly view go through our previous recorded lecture. Okay. Okay, now this is our growth rate. Sorry. Now this is growth rate. Okay. Now it is our funding requirement. Okay, if I say here, this is my internal growth rate, because here it is funded from my retained earning. Okay, how much my retained earning will be there? I will come here. Okay, the moment, or we can say it is my internal growth rate, because this portion is retained earning. Okay, now when I increase, take my external funding. Okay, it comes our AFR. Okay, because debt only. Okay, but when I talk about my external funding, of course, so it will complete my overall. So I hope now it is clear to you. Okay, if we want to achieve more growth, we need external funding. Okay, student. Now, in the end, we have discussed one topic that is called our decision refunding of bond or refinancing of bond. Students, please note that sometime what happens, a company may have issued the bonds, say around 25 to 30 years back. Okay. See, as I told you, the interest rate keep on changing. Okay, but at that moment of time, they have issued at some fixed rate of interest. They, at that time, since market rate of interest are quite higher, they maybe have issued the bond at 12%. Okay, but today time, the same type of a bond or same with the same rating of the bond can be issued at 8%. Now we can say that company is paying 4% higher than your market rate now. Okay, so accordingly, the company can redeem this bond provided, very important, provided these bonds should be callable bonds. Callable bond means the company can call them anytime before the maturity. Okay. On the contrary, there is another option is that is called puttable bonds. Okay, in a puttable bonds, this is the option vest with the investor that they can present their bonds before the due date of majority for the maturity. Okay, now here when they have presented this callable bonds, or when the company says ki, what I will do, they will call up this 12% bond. Okay, they will say ki, okay, we are refunding the money, and what they will do, they will parallelly of the same amount will issue the bond at 8% in the market. So ultimately, we can say that they can finance, they are issuing new bonds at 8%. Okay, and they are redeeming the old bond by the same amount. By doing by this, they are saving 4% rate of interest. Now, in the recent, I think it is tomorrow's newspaper, there was one cutting that I have gone through. Vedanta plans rupees 3,500 crore bond sale to refinance the debt. Okay, now Vedanta earlier have issued some bond. Okay, and generally they have want to what they want to do. They are issuing new bonds, and this bond will carry only the period of 2.5 to 3 years, and interest may be ranging from 9 to 9.5%. So by this you can see that the refinancing will can also be there. Okay, now we have to carry out a capital budgeting analysis. Okay, of course there are some questions. There are questions in your study material, there are assignment as well in previous assignment, but I am discussing one point here. In today's session, there is one more assignment. I will take up a question. See what happens if there may be some time gap, or we can say there is some transition period between the funding of issuing of the bond, issuing the fresh bond, or refunding the bond. Say, so during this time, this is called transition period. Say, if I have initiated of refunding the process, say I have started say 1/2/2025, okay, and my money from the new issue is coming say 1st March 2025. So during this period, okay, during this period, or sometime it may happen that say I'm just speaking in another way. Suppose I have issued new bonds on, I am my mistake, just I revising it again, just say I have issued new bonds on 1/1/2025. Okay, old bond redeemed on 1/3/25. So during this 2 months, normally I pay the interest on both bonds. Okay, old as well as new. This is called interest during the transition period, and that has to need to be factored into our calculation. Okay, so we need to so that is the one important point. And today's assignment, there is one question. In the previous assignment, this part was what we do. We carry out our assignment question number 1. Okay, then we will come to our these 2 questions we will cover. I think before break we can cover one question. After break we will cover next question. Then we will cover the topic of. So please refer to the assignment that I am discussing with you now. Okay, student, this question is in form of case scenario. Okay, and that has been coined, self coined. ओके स्टूडेंट्स, ये केस सिनेरियो है, ये नया ही बनाया गया है, अपने हमने ही खुद डेवलप किया है बोर्ड ऑफ स्टडीज ने. सो ये आपको अभी कहीं मिलेगा नहीं, एंड टोटली फ्रेश केस है. Okay, I'm just reading. In a recent board meeting of Unlimited, following financials of Unlimited for the year ending 31st March 2025 were presented. Balance sheet is as follows. Okay, so the figures are in thousands. So I'm not just these simple balance sheet items are there. Okay, now income statement for the year ending has also been given to you. Okay, now during the board meeting, Director A said that a company can maintain a certain growth, or even though the net profit margin remains constant and asset increases proportionately to sales, and it distributed 30% of its net profit. To maintain this growth rate, it will not require any external funds. This is the opinion of the Director A. Now, Director B proposed that just by maintaining a target capital structure and without issuing additional equity and maintaining target dividend payout ratio as proposed by A, more growth rate can be achieved. Okay, this has been quoted by Director B. Now, Director C says, though agreed with the views of the Director A and Director B, but is of view that in the coming year, it is expected that sales is likely to rise by 15%. Hence, if required, we can go for issue of equity shares, bonds, or debentures to achieve the same growth in the sales. Now, in the first 2 cases, they are talking about the growth, but they are not confirming any, because they are saying we can grow. But in the third case, Director C, he is asking that we are likely to grow by 15%. Okay, it is anticipated, it is gone. But now the question arises how we can funding this growth. We can do it by the issuing the equity shares, bonds, or debentures. Now, from the given information about, choose the correct answer to the following questions. Now, these questions are there. Now, I take a small break, only of 1 minute or 30 seconds, and I request you to understand what we have discussed now, just in a 15 or 20, well, in our till now, whatever our discussion. Please, you start sending your answer in the chat box. Okay. Now, the Director A is talking about that there are 4 options are there. Please send your answers in the chat box. Yes, Amudha, you are correct, beta. No. You are correct. Your first option was correct. Shweta, you are correct, beta. Semanathan, you have sent sir request you to provide the lecture in English. Yes, I am providing lecture in English. Okay, I have told you I will using both language. Yes, Prithviraj, your answer is correct. Okay. No, no, don't give it up. Only give only one option. Okay, okay, okay. Sorry, sir. Yeah, I got your point. Let me check beta. Shweta, just have some patience. Okay, so director A, the talking about internal growth rate. Why it is internal growth rate? Because it is said that we can maintain a certain growth rate even though net profit margin remain constant. Okay, this is one of the assumption of IGR. And asset increases proportionally to sales and distributes is 30% of its net profit. Okay, of course, spontaneously there will be growth rate. Some increase will be assets in there, but we even though we maintain our 30%, we distribute profit 30% and 70% we plow back. Of course, when we plow back some profit on a liability side, of course, on asset side, some assets will be increased. This asset increase can be in the form of cash, in case of a fixed asset, whatever be there. Okay. And to maintain this growth rate, it will not require any external funds. So when they are not asking for any external funds, so it means it is purely a case of IGR. Okay. Now I am coming to the question number 2. Okay. Of course, some student have given the correct option well before. So I am taking 30-second break. Yes, Prithviraj, your answer is correct. Beta, you are very good. स्टूडेंट्स आप इसका आंसर दीजिए क्योंकि मैंने आपको जैसे बताया कि पहले क्वेश्चन के अंदर उन्होंने कोई कंडीशन जो लिखी है वो सारी इंटरनल ग्रोथ रेट से मैच कर रही है. नाउ व्हेन वी आई टॉक अबाउट डायरेक्टर 2 की बारी है, अब आप उसमें आंसर दीजिए. यस सर, अभिषेक इज आंसर, योर आंसर इज करेक्ट. Okay. Now the correct option is, I'm coming, or more, Shweta, yes, beta, your answer is correct. Now the correct option is sustainable growth rate, because here it's saying that by maintaining a target capital structure and without issuing additional equity. So this is a crucial point. Okay, this is a crucial point, that now we are not issuing any additional equity. Okay, so this will help us to understand, because see, once we are clear with the concept, then we don't face have any problem. Now I am coming to the third option. The director C is talking about. Shweta, you have given the correct answer well before. Yes, application, your answer is correct. Prithviraj, your answer is correct. Even a student can send their answers at the query handle. Yes, Samanathan, your answer is correct as well, beta. Okay, student. Now I'm just going to my case scenario. In a case scenario, it is saying that though Director C though agreed with the views of Director A, Director B, but is of view that in the coming year it is expected that sale is likely to grow by 15%. Now here it is expected, 15% is expected. Okay. And hence we can required, we can go for equity share bond as well, debenture. So it means we don't have any restriction. We have to issue equity as well to achieve the same growth rate. So he is agreeing with A and B that of course we will pay the dividend. Okay, he will pay the dividend. Whatever you are saying, we will maintain target capital structure because we have to maintain some target capital structure like debt equity ratio. We have to maintain. I am agree. The director saying I am ready with the same, but we have to tame this 15% growth rate in any case. स्टूडेंट डायरेक्टर सी का व्यू देखिए, वो ये कहता है कि हमें 15% की ग्रोथ लेनी है. मैं डायरेक्टर ए और डायरेक्टर बी के व्यू से एग्री करता हूं कि हम कैपिटल स्ट्रक्चर भी वही रख लेंगे और हम डिविडेंड भी दे देंगे, बट हमें किसी भी तरीके से 15% की ग्रोथ को ले लेना चाहिए. तो अकॉर्डिंगली बट इट इंडिकेट्स दैट ही सेज आई एम रेफरिंग वी शुड गो फॉर एक्सटर्नल फंडिंग रिक्वायरमेंट. Okay, student. Now I hope the very this case scenario, three questions has make you clear about the what are the three basic concepts. Okay, now I am coming to this last question or last MCQ of this case scenario. If we go by the proposal of director C, then approximately dash funds shall be required from in any form in form of equity or debt, assuming that dividend as proposed by director A is paid out and asset and current liabilities are increased in the same proportion as increase in sales. Okay, now here we can solve it in any manner. Either we can go by the formula or whatever method we can see. Okay, so let us see. There are three options, four options have been given to you. Now I start solving the same, then we will get the answer. Or I give you some 1 minute, if possible, 1 or 2 minutes. I think you can get the. If you have gone through the previous lecture, our recorded lecture, then it will hardly take you 2 minutes. Okay, I am just waiting. You give the answer. Meanwhile, I am start solving. If any student solve at their own, please you share your answer. Okay, after 30 seconds, I will start solving the question. It can be both way. It can be as well the balance sheet approach. It can be as well from the your theoretical approach. I will discuss both approaches. No, beta. Shweta, you have to try beta. I think don't guess. Or I can see if I start solving the same, then I will see maybe I will start my own. I think okay, let us start first with the balance sheet approach. Now in the question it is saying all the assets will be increased. Okay, so accordingly, my fixed assets, student, I am just start solving because I am doing this only. There is no written note for available with me for this solving the balance sheet approach. I am just trying at my here only. Okay, of course I have solved it by the formula approach. Okay, so if correct me if I am carrying out any wrong calculation. Okay, now cash. Sundry debtors. Closing stock. Okay, I hope I'm carrying out all calculations correctly here. If any error is there, please do let me know better. Okay, now I'm starting with the sundry creditors. I'm leaving this figure, balancing figure. Okay, so just I'm doing 1,2 plus 88,000. Okay, now here since balance sheet total will be same, my asset has been side has been increased from 7,70,000. Okay, to 8,85,500. So I will start deducting this amount from there. So this will be my here balancing amount. Okay. Here I'm just writing here the balancing amount that will be here 6,57,800. Okay. So, but out of this, I'm saying my equity is 4,80,000. I'm presuming it is only an old equity. Okay, previous old. Okay, 10% bonds old. True. Now see, there is one retained earning portion. There is one retained earning portion that I will calculate. it here. Profit is 61,000. Sale is net profit ratio comes. Net profit ratio comes point. Just tell me.
5.23.
Yeah. Very good. That is coming something around. I'm just writing in rounding at this point. Okay. So my ratio is here. My net profit ratio. Okay. Now my increased sale. Okay. My earlier sale was 11,77,000. My revised sale will be this much. Okay. Because there is a 15% increase. Okay. Accordingly, my new profit will be okay, student. Now I think till here there is no doubt. This will be my new revised profit. We can say it is my revised profit, new profit. Okay. I will distribute a percentage of in the form of dividend. Sorry. I will distribute a percentage of in the form of dividend. How much dividend I will pay? 30%. So whatever left with me, that will be my retained earning. Okay. Now this retained earning will be 49,588. Okay, student. So my retained earning I write here 49,588. Okay, now this much of external funding requirement. Oh shit. This much of external funding
36
requirement I require. 36.
36.
Very good. Very good. Okay. Now this can be in the form of equity or this can be in the form of the external debt. Okay, that has to be decided. But it will not hamper our capital structure. So this can be, it will be say that it depends on the further condition given in the question. Sometimes they may say that, okay, we can issue only 6,000 in the form of more equity. So balance will be issued in the form of debt. Okay. Okay, now this is kind of a balance sheet approach. Now I am just discussing with you the formula based approach, how we go about the formula based approach. Sorry. Again.
Sir, I have a question.
Yes, please. Better?
Sir.
Yes, बेटा.
सर एक्चुअली हमने प्रॉफिट लिया है सर. आवाज आ रहा है आपको? हेलो.
हाँ आ रहा है बेटा. प्लीज टेल मी.
हेलो.
हाँ यस बेटा.
ये जो हमने प्रॉफिट कैलकुलेट किया है हमने प्रॉफिट जो लिया है वो इंटरेस्ट लेस करके है पैट.
यस
जो हमने कंसीडर किया है. लेकिन अगर हम इंटरेस्ट अगर सेम रखेंगे तो वो एक प्रॉब्लम है ना क्योंकि
नहीं वो प्रॉफिट ज्यादा आएगा आपका. आप ऑफ कोर्स मैं बताना चाह रहे हो, आप ये बताना चाह रहे हो कि मैं प्रॉफिट जो करा है उसमें इंटरेस्ट पोर्शन माइनस करके निकाल रहे हैं परसेंटेज. ये कहना चाह रहे हैं ना बेटा? क्या कर रहे हैं उसको माइनस इसलिए करते हैं कि जैसे कह सकते हैं कंजर्वेटिव अप्रोच रखी जाती है मार्केट में.
बट एक्स्ट्रा भी देना पड़ेगा ना क्योंकि हम ये फर्ज में
परसेंटेज तभी तो हम लोअर साइड पे ले रहे हैं उसको. मतलब हमने आप समझिए
सर लोअर साइड पे नहीं ले रहे ना. अभी हमने इंटरेस्ट किया है वो 10% बोल पे किया है. 98 जो हमारे पास अभी करंटली बोल है. अभी हम ईएफआर करेंगे तो उसमें एक्स्ट्रा इक्विटी भी हो सकता है.
इंटरेस्ट का बेनिफिट नहीं मिलेगा हमको.
हाँ वो इंटरेस्ट हमने कैलकुलेट नहीं किया ना कि कितना इंटरेस्ट हमें लेस करना है.
नहीं बेटा देखिए जब हमने प्रॉफिट की परसेंटेज निकाल रहे थे, ये हमने परसेंटेज निकाली है, इसमें इंटरेस्ट माइनस किया हुआ है हमने.
हाँ, ये यहाँ पे जो है वो करंट बॉन्ड के हिसाब से
करंट
हमने
वाला ही किया
माइनस
हुआ
किया
है, करंट वाले
है।
को ही
यस।
इसलिए लेके चलते हैं क्योंकि ये डेट तो हटेगा नहीं किसी भी हालत में।
बट एक्स्ट्रा जो आने वाला है उसका तो लिया ही नहीं है ना,
नहीं
वो
उसका
इंटरेस्ट
हमने नहीं, देखो बेटा हमने क्या निकाला है, हमने जो निकाला है कि हमें बाहर से कितना फंड लेना पड़ेगा। ये तो हमें मान के चल रहे हैं कि भाई अगर मान लीजिए हमने, क्योंकि उसका जो इंटरेस्ट पे करा जाएगा वो कब पे करा जाएगा, साल के आखिर में पे करा जाएगा।
हम्म।
आप समझ रहे हैं, क्योंकि उसका
ओके
इंटरेस्ट
सर।
कब पे करा जाएगा, ग्रोथ हो जाएगी। पुराने
हम्म।
वाले का तो आपने पे कर दिया, वो तो मान के चलेंगे, लेकिन जो दूसरे वाला आप लेंगे उसका इंटरेस्ट कब पे करा जाएगा, वो साल के आखिर में पे करा जाएगा।
ठीक है सर।
ठीक है,
गॉट इट।
उसको तो हम साल के आखिर में पे करेंगे ना, ये तो हमने देना ही देना है एक बारी। इसको तो हम छेड़ ही नहीं सकते, क्योंकि ये बाद में ईएफआर में ये डिसाइड होता है। मैं जो आप बात कर रहे हैं मैं आपके पॉइंट समझ गया। वो फिर हमें ना निटी गिटीज देखनी पड़ती हैं कि जिससे कि हमारे और फंडिंग ना हिले।
ठीक है सर।
ठीक है बेटा।
ठीक है सर, थैंक यू।
Going by this formula approach, you can do one thing. If you possible, you share the answer with me, different answer. Then I will work upon the same. Don't worry. After the class, I can work upon the same. Okay. Now I'm going by the formula. Okay. If we see the formula, that is said asset divided by total sales equal minus L. Okay. So this is in total assets and this is current liabilities. Okay, and my profit here is revised. Okay, student. So our correct option will be option D. Okay, student. Here we are going for the small break. Okay. So after the break, after 10 minutes, I will rejoin the session. Okay. Meanwhile, Samek, your answer is correct, beta. You have sent all the you have third for the third. Okay, yes. Up to third, your answers are correct. Okay. So meanwhile, if still you have any doubt, we can consider the same. Okay, I move the slide downward. Okay. Okay, is it right now better? Okay, student. Now we are moving for a break of 10 minutes. After 10 minutes, we will continue our discussion. अशोक जी स्लाइड लगा दीजिएगा ब्रेक का, या ये स्लाइड छोड़ दूं? हाँ हाँ ब्रेक स्टार्ट। ओके। Uh, so I hope it is clear to you now. Now, students were asking, sir, why we have considered the interest. I have taken 5 to 10 minutes for this thinking the same. Of course, I will give a deep thought for the same. But I think, see, when here our purpose is to compute our the proportion of the retained earning, or we can say portion of the earning that is retained with us. ओके, ये इस वक्त क्या है कि हम ये जानना चाहते हैं कि हम कितना रिटेन अर्निंग का पोर्शन रखे, मतलब प्रॉफिट का कितना पोर्शन रिटेन करेंगे. तो मे बी वी हैव assumed that the interest cost will be increased proportionately. Okay, so of course there may be some changes. It may be possible that we may not get the rate of interest same, or it may be lesser or higher, but we have to assume that of course this much of increased interest we have to pay. Somewhere we are assuming that. So, and we are assuming this much of retained profit will be plowed back, और जो प्लाउ बैक चलता रहेगा वो स्पॉन्टेनियस बेस पे धीरे धीरे चलता रहेगा. Of course, I will give a deep thought for the same. And if you come across any new concept, you can discuss me over the telephone, or you can share it through the mail. But right now, what we have discussed that normally has been covered in the various sources from where I have drawn out this concept. Okay, student. Now let us start start our further discussion. Now, student, when this is one of the case scenario. Okay, now I'm taking up the next question quickly. Okay, so this is the case where a company is refunding. Okay, there is company is refunding their existing bond and issuing the new bonds. Okay, so the question says like that. Best Trust India Limited is contemplating calling rupees 3 crores of 30 years 1000 rupees 1000 bond issued 5 years ago. Just a second. Issued 5 years ago with a coupon interest rate of 14%. The bond have a call price of 1140, and he initially collected proceeds of 2.9 crore, 1 crore due to discount of 30 per bond. Okay, the initial floating cost was rupees 3,60,000. The company intends to sell rupees 3 crore of 12% coupon rate. Here it needs to be bond 25-year bonds to raise funds for retiring the old bonds. So here the duration is for 25 years. It proposes to sell the new bonds at their par value. 1 second, student. Okay, no problem. I just par value of rupees 1000. The estimated flotation cost is rupees 4 lakh. The company is paying 40% tax, and its after cost of debt is 8%. As a new bond must first be sold and their proceeds then used to retire old bonds, the company expects a 2-month period of overlapping interest rate during which the interest must be paid on both the old and new bonds. What is the feasibility of bond refunding decision? Okay, student. Now here in this is question purely of the capital budgeting type. Now when we talk about capital budgeting decision, please always remember, we carry out present value of cash inflow minus present value of cash outflow. Simple logic will be also applied here. Okay, generally present value of cash outflow involves initial outlay or initial investment. Same way we will carry out here. Of course, we will start our working notes, then we will move to the final answer. First, we compute initial investment. Of course, if you have viewed our previous lecture, then you must be aware that how we carry out the computation. Now call premium, because since we are calling it at early, some premium need to be paid here. Of course, for this call premium, we will enjoy some tax benefit. Now this is a flotation cost. See, for the flotation cost, we will not consider the rent tax benefit because this is likely to be written off over a period of, or we can say, span of the life of the bond. Now here the overlapping interest, because there is some period of where we have to pay interest on the old bond as well. Okay, we will take the tax benefit. Okay, see, 25 years have been left. Okay, see, if we go by the same, 30 years before they have been issued the bond, and sorry, 30 year is a period. Okay, and 5 years ago they have been issued. So it means 25 years still have been left. Okay, please important. All these figures need to be important. All this point need to be noted very carefully. Okay, accordingly, the amount left over, this much amount will be left over. Okay, this will be immediately written off because we are now, this will not be no more item. So this will be considered as a negative outflow. Okay, that's why we are keeping it in a bracket. See, here this is my outflow, this is my outflow, this is my outflow. Here it will be considered as an inflow. That's why I am it considering as a in a bracket. Last item, tax saving on unamortized flotation cost of old bonds. Again, it is a kind of a saving because I am writing it off on a one go. So this is my initial investment. Okay, student. Now I am coming to the second working note. And this is very one of the important very working note because it will base our main answer. Cash flow saving. How much we will save on because of this decision. And please, important point here to be noted that there is no any item like depreciation that is normally in a capital budgeting decision, because here no depreciation is there. So there is no depreciation adjustment need to be made here because whatever be the payment, whatever the receipt, this is totally in cash. Okay, less interest, less tax. Amortization of discount. So what we are doing, we are seeing what is our old bond scenarios there, how much outflows annually we are doing them. Okay, so this is a tax saving since our flotation cost was 9 lakh and that for the 30 years. So both are, this is our negative outflow. So ultimately, annual after tax cost payment under bond under old bonds. Okay, we categorize it as A. Okay, okay, students. So this much we are paying under old bonds on an annual basis. This was our outflow. Now we compute what will be our outflow under new bond annual outflow. Less tax at the rate of 40%. Okay, this amount comes 21 lakh 60,000. Here in this new bond, there is no discounting is there. Okay, there is only a part of flotation cost, and for this we will get some tax benefit. Now here, student, please note that this is very important. Normally, student commit mistake in this here. They normally take 30 years. So ultimately, okay, this week is a B. Annual cash flow saving. A minus B. Of course, it comes 3,49,600. Okay, friend. Now this figure is available with us. Annual saving. Okay, and here our figure is available as well for the initial investment there. Okay, now we draw out our main answer, computation of NPV. Now sometimes student ask, sir, whether we should start answer with the main, we should draw out the main answer, then we start working notes, or we start with working notes, then draw out the main answer. Now student, it is up to you only. There is no hard and fast rule for the same. Okay, so student can start with the working notes, then come to the main answer, or they can start with the main answer, leave some space, and then carry out the computation. Student, I will always advise to you, please carry scale or ruler set in your examination hall, so that whatever work do it in a tabular manner. If you have to carry out any calculation, etc., so present your answer in proper tabular manner using the scale. Okay, provided this is not restricted under any examination conditions. I think there is no any such restriction. Now we have to compute present value of annual cash flow. Like it is here, like because annual, we have to multiply with the present value factor. Now when we have to compute present value factor, since here in the question it has been mentioned after tax cost of debt is 8%. So we will use present value investment factor at 8% for the 25 years. Okay, that is our 10.675. Okay, this factor is there. So we multiply this amount with this, the figure comes. Okay, now from this is working with the working note number 1. This, okay, now we initial investment, sorry, this is a number working number 2. This is initial investment. Okay, this was a reference of the working note number 1.
29 of 20,000.
Yes, beta. Very true. Okay, so NPV is our
8,11,19.
very good. So this is our NPV since decision. Please, student, remember that in question of capital budgeting, always write the decision. Okay, sometime, of course, in the question it may have been asked NPV compute NPV up to. So then you can leave there, but otherwise, please always remember, because we have to complete the answer. Okay. Refunding bond is recommended because NPV is positive. Okay, students. So I hope it is clear to you now, because my purpose is to make you understand the concept of interest for the transition period. Okay. Now with this, we have come to the topic of the our first chapter number 1. Now I am coming to the discussion for the chapter number 2. Okay, and the topic is basically the risk management. Okay, just have some patience. Okay, now when we talk about the topic of risk management, basically risk management, we talk about, of course, risk management is discussed in a broad spectrum because risks are of a variety type. Okay, we have covered various type of a risk, and even we have provided a list of risks. This is not the exhaustive list. It is only illustrative risk. Different type of risk takes place. If I talk you about a cyber risk, now 10 days, 10 years or 15 years earlier, there was not such terms like cyber security, cyber risk. But today, I think there is one survey. Cyber risk is coming on the top. Somewhat it is coming on the top. Why? Because from the cyber risk, other risks come out like financial risk, losses of finance. Okay, reputation risk, very important. If any cyber risk attack is there, the reputation comes at the stake. And a very good example, like this in recent case of cyber attack of the AIM on an AIM server, it was a very it has questioned the reputation of AIMS. स्टूडेंट जो रिस्क मैनेजमेंट का टॉपिक है, अगर हम रिस्क मैनेजमेंट की बात करते हैं तो रिस्क बहुत तरह का होता है और बहुत वाइड स्पेक्ट्रम में होता है। और उसके लिए क्या होता है कि जिस तरह के नए नए चीजें आती है, नए नए रिस्क भी आते हैं। अगर आज से मैं 10 से 15 साल पुरानी बातें करूं तो साइबर रिस्क वगैरह कोई जानता भी नहीं होगा, ना उसको कोई इंपॉर्टेंस देता होगा। बट आज की डेट में वह सबसे इंपॉर्टेंट रिस्क बन गया है, क्योंकि उस रिस्क से और दूसरे रिस्क बनते हैं जिसमें एक रेपुटेशन रिस्क सबसे इंपॉर्टेंट है। अभी जो रिसेंट एम्स का सिनेरियो हुआ है, फियास्को हुआ था 2 साल, लगभग 1 से 1.5 साल पहले, तो उससे एक क्वेश्चन हो गया एम्स के रेपुटेशन पे। तो that's why we have covered a lot of risk. But here in a AFM paper, our main consultation is on the financial risk. And normally financial risk covers a foreign exchange risk, interest rate risk, counterparty risk. Okay, all these risks are covered there. So in addition to that, in the risk, we have covered the topic of our one very good value at risk. Okay, so of course, what is value at risk? Now, when we talk about value at risk, I'm just giving a briefing to you. Okay, then I will take up the assignment, and there are 2 more. I think there are 2 more questions are there. Okay, there are one case scenario based question, and another is where based scenario question. Okay, so just 5 to 10 minutes I discuss with you, then I will come to the question part. Now, student, when we talk about the value at risk, what is the value at risk? See, value at risk means how much our we can say how much risk we carry. Okay, students, somewhere around in 1990s this concept have come into the picture. Okay, where the company has started asking how much. See, where the institutional investors are there, they invest the money at their in a companies. Okay, with different portfolios they invest the money. Now, when they invest the money, of course, they carry the risk. So they want to know how much risk I am carrying. And with this, there are some other parameters are attached, like how much, what is the confidence level? Okay, how much I am confident that my risk will not be more than it. So this is kind of a concept of value at risk, from where we know that how much exactly we are going to lose. And say it may be more or it may be less. But normally we give some estimate based on our probability analysis. Okay, generally for the value at risk, there are 3 methods. Of course, I am just sharing with you more discussion on this. Only one method has been covered in your study material. Of course, this topic is very used in vast, but there is one other topic that has been covered in method that has been covered in your study material. That is the most popular one. Okay. There is 3 approaches are used. One is parametric. This is also called variance and covariance approach. Okay, historical simulation. And Monte Carlo simulation. Okay, when I talk about this Monte Carlo simulation, when we will discuss the topic of capital budgeting, even there is some use of this technique is there also as well. Okay, now when we talk about this parametric approach, this has been covered in our study material. Okay, when we talk about this approach, basically this approach says that we have to make some assumption. Okay, what these are assumptions? Generally, these are assumptions like that. Generally, we carry out. See here, there are some benefit. Okay, first of all, it need our mean value. Okay, it needs standard deviation. And generally, it use the probability theory for this. Okay, how it use the probability theory? Because this probability theory is based on the assumption that that the distribution is normal. The data is normally distributed. We can say that. Okay, distribution is normal. Okay, so normal distribution, if I say, if you are a student of mathematics, this is the normal curve. Okay, so it is assumed that the data is distributed like this. So normally you will see that the extreme values are normally like here, lies here. Okay, and normally that's why we say that our mean value is here. Okay, so you can see that when we talk about any portfolio, so we can say that the value of our portfolio will be less, or it will go to this extent. Our profit will be, say, if I am getting some mean return, expected return, from this it goes down and it reach to this level. So this is the portion where it counts. Okay, because overall area under this curve is 1. Okay, this can be 5%. So by applying this theory, I came to know that what is the probability that my value will be this much. My loss will be somewhere around this much. Okay, because from the standard deviation, I came to know how much loss will be there, and my loss I came to know that my loss will be how much. What is the probability that my loss, or I can say that if I am lying here, so what is the probability? Similarly, we can use in a reverse manner. Shweta, now my voice is clear.
थोड़ा कम आ रहा है सर.
अजीत, जस्ट चेक, मेरा वॉइस कम आ रहा है क्या? Okay, better. There may be some net issue. No problem.
Okay, sir.
Okay. Now see what happened. Here we can consider it in reverse manner. Okay. See, if I want to know the probability here, what is the probability that my portfolio value will be this much? Similarly, I can say that how much I am confident. How much? What is the? I can say that. What will be my loss? Or we can say that. How much with a 95% of confidence I can say that my value of the portfolio will not be less than this value. Okay, or are you getting? I'll just make it out. With 95% of confidence, I can say that my value will not be lie here. Okay, so I want to know. So I want to know that I can know that my how much value my at risk. Okay, that's why it is called value at risk. Okay, so when I am talking about this method, so here it use mean value, mean, standard deviation, and we use the normal area curve. Okay, now on the other hand, this historical simulation is also computed, but here what we do, we put the data in a computer. Okay, historical data long back. Then from there we compute to know okay, how many times our value has gone below this portfolio, or we can when our negative return. All these are mathematical calculation. Okay, so generally they use the simulation techniques, etc. Then they compute. Now in a Monte Carlo simulation, what they do, they draw out a model. Okay, they draw out a model on some criteria, and in this criteria they put some fictitious values. That's why it is called Monte Carlo simulation, and the same method will also be used in your capital budgeting decision as well. where we come out with some fictitious value. If this happens, then what will be our value? If this much our sale, then what, like this. There are many criteria are there. Okay, here we use the historical data. Here we use the fictitious data, or we just try our on a random number basis. If you know that there is a concept of random number basis, there is a random table. Okay, this random number even can be generated from your Excel sheet as well. So basically, these two methods are not for our discussion. I just sharing with you. So this method is normally discussed. That is first method, that is parametric. Okay, so these are our the basic concept have been used in our discussion in the topic of risk management. But we have kept our discussion for the risk management very limited. Of course, some theoretical question have been asked, or normally it can be also asked any numerical questions. Generally, for a numerical question, if you are well versed with the concept of this your life, this is your portfolio management, then it will more helpful to you to solve the question. One or two questions have been given in the study material. Okay, now we are coming to the assignment question. Okay, now let us see the assignment. And this question is in form of some case scenario. Okay, student. Now this is a question. I'm just giving a question to you. Discuss some of the risk arising out of the recent tension between India and Pakistan. Okay, so now the question is, you have seen that recently there has been tension in between India and Pakistan. Okay, so first of all, my question to you, I'm just throwing this question to you. Of course, it is a financial risk, but there is one term, if you recall that, or if you have studied from your own observation, what is the exactly broad term that we can use for this risk? I am taking 30 seconds. What is, of course, there are other risks will be coming out of the same, but one of the major risks, or we can say broadly, we can categorize in one category, very important, and that is very commonly used. And that's why I always encourage the students to read the financial newspaper on daily basis, because at least from this you can understand where the various terms. Let me check. Yes, Devorat, you are nearby. You are nearby. You are nearby to the same, because you have reached to the correct answer to somewhat. Amodha, you are also giving the same, but you are just nearby. Just only one more word need to be added. Okay, I share. Devrat, you are just again nearby. Okay, I just share with you. It is a geopolitical risk. Okay, of course, you are as I said, political risk. It is also there, but here it is also called geopolitical risk broadly, because in earlier it is continuing war between Ukraine and the Russia. Geopolitical term risk is normally used. Okay, out of this, many other risks are coming out. Okay, now I'm just briefly discussing with you. This is not an exhaustive list. Okay, please remember this is not an exhaustive list, and this is only I am just sharing with you. So first of all, higher cost of goods. See, free movement of the goods have been hampered. Okay, because of flight cancellation and other reason. So it has increased into the cost of good. Even somewhere we are relying on the goods from outside India. So that due to route diversion, their cost has been increased, because recently in the since flights from the above Indian flights from the above Pakistan are diverted. So Air India has incurred a huge expenditure for the same. Okay, so increased cost of goods. Second, stock market instability. You have seen the market has tumbled. Of course, defense stock are contrary to it. Okay, there are some seen in the rise in the prices of the defense stock. Decline in tourism. Okay, on the border area like Rajasthan, Jammu and Kashmir, the tourism has been declined. Opportunity cost. See, funds, government funds that are meant for education, health, and other welfare activities have been diverted to the war. Debt pressure. Government has to take the money, borrowing the money to fund the war. So this increase the debt pressure on them. Okay, then there is a increase insurance premium. Generally, what happens when war is there? So generally, the insurance cost premium generally increases because there is a chances that there are more chances of the losses. So to compensate them, the insurance company increase their premium rate. And very one important that is affecting the country's sovereign rating. Okay, sovereign, we can say sovereign credit risk. See, as on date, S&P that is normally carry out the international rating. So they rate the India as BB negative, that is a positive outlook. Okay, on the other hand, they rate the Pakistan as a triple C plus. That I have taken from the net. Okay, this is not my own study. Okay, now this is a stable outlook. Okay, of course the war was not prolonged for a long. Had it been war, there or tension between prolonged for the 2 or more 3 weeks, their rating have been downgraded. Okay, because the company normally government normally comes into the take the debt burden, and to service this that debt burden, their repayment of chances start declining. So that's why it is also called sovereign rating is also going to be affected. When sovereign rating is going to be affected, less and less companies may be interested in investing in India. Of course, they may be invest in the companies in a company, but they also look for a sovereign rating as well. Okay, student. So if you any other risk is coming to your mind, I'm giving you 30 seconds to you. You can also share with me. Yes, yes, Devratan, you are correct. They have taken the loan from IMF. Okay, student. So now I hope it is clear to you. So it is a kind of a question that I have put in the form of some just it is kind of a case scenario as well. Question can be said, because by this your knowledge will be tested here. Okay, of course, it is a kind of a away from the traditional method of asking the question, but that has come to my mind, so that I will I've put in the assignment. Okay, student. Now we are coming to the last question of the assignment, that is value at risk. You just this is a form of case scenario. Okay, it has been self. It is a self-coined question. Case scenario question is totally fresh. So I am reading out the question. Mr. R, a portfolio analyst at as investment, is evaluating the risk of investing rupees 5 crore in XYZ Tech Limited, a volatile mid cap stock. There are some categories that are there, lower cap or mid cap and high cap. All these are categories are there. We are not going into nitty-gritties. So the expected daily return from the stock is 0.1% and the standard deviation is 2%. So this word is very important, daily. The other information is given to you like this. For 99% confidence level, we use the Z factor. We use the Z factor. Okay. For 95% level, this is the Z factor. Okay. Now, generally, this Z factor is derived from, say, we can say any value, whatever value we want to take, minus mean value, or we can say like this. N minus just second process. This is mean value divided by standard deviation. Normally, we derive the value of Z value from here. Okay, so we can say that for how much point the value is away from the mean deviation, mean deviation. Okay, so this is the value 2.33. This is the value 95 1% confidence level. This is 90% confidence. So this is just an approximate table, and this table values have been derived from the normal curve, normal area curve. Normally, these are provided in the examination. Of course, some of these values can be crammed like 99% and 95%. These are normally more used. Okay, even 91%, but these are more popular values that are more used. So even you can remember or you can cram. Okay. Even sometimes we use 1.65 here. Okay, that is not an issue. Then number of trading days. See, student, always remember that number of trading days are normally always lesser than your actual number of days in a year. So for a week, the number of trading days are considered at 5 days. Fortnight, we are considering 10 days. And for a month, we are considering 20 days in a month. Okay, this is our for our calculation purpose. Okay, from the above information given above, choose the correct answer to the following questions. Okay, the chances that the portfolio could lose more than 52 to 0% in the span of a fortnight is. Now you have to compute it. Okay, I'm just giving you 2 minutes, 1 minute, so that if you have any studied referred our previous lecture, I don't think you will face any problem. Just try it. Otherwise, of course, I will solve the question. Okay, student. Now, just No, better not. Shweta, no. You just take the number of days. Important here is the number of days. Deliberately, I have taken here different number of days. Okay, student, now I am start solving the question. Student, see here, I am saying that in a span of fortnight. Okay, in a span of fortnight means the number of days are, trading days are 10 days. Okay, my here figure is available for the daily basis. Okay, so what I do, first of all, I would like to convert this fortnight figure into 1 day loss. Into 1 day loss. Okay, so for 1 day loss, what I do, I divide this figure by square root of 10. Because if you see our recorded lectures previous, when we have to convert daily into 10 days, we multiply with the square root of the 10. Okay, here we have to compute from 10 days to 1 day. We will do the reverse way. Okay, now tell me the answer. I'm just computing. What will be the value? Just give me the value. Yes, one of student has sent the value. Okay, so value will be okay. The value will be somewhere 1 day loss will be around this much of value. Okay, now what I do, I divide this value by my 1 day standard deviation, and my standard deviation is 2% daily standard deviation. Okay, now when I divide this value by this, my resultant value will be this much. So this much of, I can say, it is a factor coming, normal factor is coming. Okay, so what I do, I locate this value. I locate this value in the table given here. Okay, this value is there. Okay, so this is my confidence level 95%. Okay, since I am confident that my value will not be less than, on a daily basis, my loss will not be more than, my value will not be go below this. So I am confident that I am 95% confident that my value will not be go below this level, or I will not lose out, I can say that my loss will not be more than it. Okay, my loss will not be more, I'm 95% confidence that my loss will not be more than 1,64,000, this much of amount on a per day basis. So ultimately, I can say that the chances of probability is 5, because 100 minus my confidence is 5%. So there is a 5% probability that my loss will be more than this value. Okay, this is a span of 10 years, 10 days. Okay, this was a span of 10 days. From 10 days, I have converted into the this much of days. Okay, or even I can do one other way around. Some student also said that somewhere other around like that. I can say if 5,20,000, this figure I am writing here. Okay, and what I do, my standard this is just you try here just now 2% of rupees 5 crore into square root of 10. Even you write this value, you will also get the same value. You can do that way also. I just try it because I think it will give the same answer. Yes, student, it is giving the same answer. So you can do it that way also. Okay, either the way you do, your answer will be correct. Okay, student. Now I am coming to the next MCQ. Just read it out. Yes, Shweta, your answer is correct, beta. That I have given you the briefing about the various methods that is based on the same. In a parametric or generally this method, variance covariance approach, basically the confidence level that which because not from the normal, because if we assume that the area distribution is a values are normally distributed, so generally we go by the confidence level. Okay, so the correct option is the to scale the risk based on confidence level. Okay, now next we coming out third question. Now here we have to compute the answer. That is, we want to 99% confidence. How much our value will be there, or we can say that the where what is our value at 99% confidence level for a period of 15 days. That it is approximately not less than it. Okay, so we want to 99% confidence की value उससे ज़्यादा कम नहीं जाएगी. Here you have to take care of one very important part. I have mentioned the even you can compute. I'm just waiting for 1 minute. I'm just giving you a very small hint. Here I have mentioned 15 days period of holding. Okay, whereas values are determined on the base of trading days. Okay, so please be conscious while solving the formula, while solving the question. Okay, so now here please note that we shall use the 10 days. Okay, now see, for 99% confidence level, okay, I will use this value. Okay, and what I do, I multiply standard deviation with this Z factor, that is standard deviation is my 10 lakh, okay, into 2.3. Okay. However, I want to I want to compute it for the 15 days. Okay. So my daily confidence level, 99% confidence level, my value will not be less than 8. Okay. Because of standard deviation, I will use the factor 10 here. Okay. So now my value comes somewhere around. Okay. So somewhere this value will be near approximately. Now it says the daily wear, okay, of the 99% confidence for the position taken is approximately. Now here it is a very simple. Here we have taken 10 days. Okay, my daily wear will be daily standard deviation into the factor that is written over here, Z factor. Okay, so the correct option is A. Okay, student, now it is clear to you the concept of where, how we compute. If you have any doubt, you're free to discuss here. Shweta 5210. Shweta, can you show how you have computed beta? Or you can come on the mic.
So this is the answer of question 5.
Yeah, fifth. Okay. No, it is not correct. Okay. Okay, student. So now I am coming to the last question. That is the key assumption in the wire method used in this scenario is or we can say just wire method used in this scenario is a major assumption here. Yes, now you are correct, beta. Very correct. Okay, now here I'm just giving you. Now here the correct option will be A because Z factors never changes. That we have seen our Z factors are normally we compute it. Okay, because it does not change whatever the factors are there because this does not change daily. On a daily we compute some standard deviation and we on that basis we compute it. Okay, and next is market is always bullish. This is also a rubbish and no risk of losses. This is all rubbish. So only one options are there that is here. So I hope with the today's assignment, the both concepts, all the concepts that are covered in the first two chapters are clear to you. So now before we wind up, I just giving you some tips for the theoretical answers. Like whenever theoretical questions are there, some students are how much I should write. Now, student, of course, you cannot reproduce all the study material there in the examination. But what is expected from you is the basically key points. Okay, my request to you, please, student, you go through the study material at your own. Okay, prepare your own notes. Because see what is happening, some students are referring some coaching centers, small books for a theoretical portion. Please avoid them religiously. Please don't use them. Because see what happens, everyone has their own perception. Okay, for one person who has written the book, maybe something may not be important to remember for him, but it is important for you to remember for you. So better you prepare your own small notes in a small notebook. Okay, this will help you to recall all the points during examination. स्टूडेंट्स, मैं आपसे यहाँ पे एक बात कहना चाहूंगा बिफोर आई वाइंड अप माय सेशन, कि जब आंसर थ्योरेटिकल क्वेश्चंस का आंसर लिखा जाता है तो बच्चों का डाउट होता है सर कितना लिखें. ऑफकोर्स हम सारा स्टडी मटेरियल का नहीं लिख सकते, लेकिन आपके की पॉइंट्स आने चाहिए और उसमें कीवर्ड्स होने चाहिए. कई कोचिंग सेंटर वालों ने अपने वो नोट्स निकाले हुए हैं छोटे, आप उसको बिल्कुल अवॉइड कीजिए क्योंकि वो बहुत छोटा है और वो जो सोचते हैं कि मुझे ये याद रहेगा एग्जाम में, हो सकता है वो आपको याद ना रहे. ओके, तो आप अपने नोट्स खुद बनाइए छोटी सी कॉपी में. वेरी इंपॉर्टेंट, your answer should be supported by keywords as well. And very important, you need to sometimes what happens, the student keep cram the headings and they don't write even a single line in the there, don't give any explanation. So please avoid it, marks will be deducted. Okay, and whenever you write any explanation, please remember it should be correct explanation. Don't make your own assumptions or like, your answer should not be generic. Your answer should be to the point and it should be relevant to the question asked. So, and very important, whenever you write the points, it is always better you just leave one line between the answers, between the points, so that they look nice. Okay, they look or they are look they are somewhat come out in a readable form. Okay, sometime what happens, student write and they give it without any leaving space, then examiner may face the problem. So this is very important, and very important, fresh question should be started from the fresh page. So these are some tips for you to help you to score good marks in your examination. Now, student, at this moment of time, before I open up the session, and one more important point, all topics are important. Student, please remember, no topic will be left out. Because why I'm repeating it again and again, even my webcast, etc., I will repeat. Because see, the question pattern nowadays is different. It consists of subparts. Okay, so it consists of subparts. It may be possible that if question number 1 have a subpart A, B, and C, you are very good in answering this part B, but you don't have any idea about part A. Okay, so then you will lose unnecessarily the marks. Of course, I also understand that there are some topics that are very interesting like derivatives, forex, and especially for the derivatives, I request all the students to please remember that one thing. Here the classes are for academic purpose only. Okay, we neither promote and nor suggest you to enter into the derivative market at all or play in the derivative market. Okay, because totally it is different. So my request to you, until you are student, please don't do this. Okay, don't indulge yourself in derivative trading. Okay, of course we shall discuss in the forthcoming classes derivative, etc., but these are mainly for the academic purpose only. And frankly speaking, here our purpose is to hedging is our main purpose here. Okay, student, so with this I am opening the session for you to you. If any queries are there, you just discuss with me, otherwise we will end the session. अशोक जी, सबको राइट दे दीजिएगा.
सर ये स्लाइड अवेलेबल होगा ना?
कौन सा स्लाइड अवेलेबल होगा बेटा?
सर ये जो अभी आपने ये जो क्वेश्चन आंसर्स करवाए हैं, ये
बेटा
स्लाइड अवेलेबल
स्लाइड अवेलेबल का होता है कि नॉर्मली हम करते नहीं हैं, क्योंकि उसका रीजन ये होता है कि हम चाहते हैं नोट लेक्चर को दोबारा देखिए, क्योंकि सारे लेक्चर अवेलेबल हो जाएंगे वहाँ यूट्यूब पे. तो आप जब कर सकते हैं तो देखिए, क्योंकि यहाँ सारा ना रफ वर्किंग होता है, नीटनेस तो होती नहीं है इसमें। ओके, तो हम चाहते हैं अगर आपको चाहिए, मतलब अगर कहेंगे तो देखते हैं फिर कोई सोल्यूशन निकालते हैं, क्योंकि कितना आएगा मटेरियल ये भी क्वेश्चन बन जाता है। लेकिन अगर आपको कहीं
मेन
पे,
केस आपका
हाँ
आपका जो
बताइए।
क्वेश्चन नंबर 2 था ना,
हाँ
क्वेश्चन
हाँ,
नंबर 2, उसका स्लाइड, उसका अगर ये मिल सकता है आंसर
मैं कौन
तो
सा
अच्छा
आंसर
है।
बताइए, क्वेश्चन नंबर 2 में मैं जस्ट आई चेक
वो
यू आउट, ये वाला जो
डेट
है,
वाला।
डेट वाला।
यस यस।
ओके, मैं इसका आपको सोल्यूशन व्हाट आई विल डू, इनका जो सोल्यूशन है ना, मैं उस पर अपलोड कर दूंगा मैं, ठीक है ना।
ओके सर।
वर्किंग नहीं करूंगा उसमें,
ठीक है
जैसे सोल्यूशन टाइप रिटर्न जो भी है वो कर दूंगा मैं, जैसे
ठीक है सर।
ऑप्शंस है ना ए बी सी जो भी हमारी है अलोंग विद, वो मैं इसमें अपलोड कर देता हूँ। गुड सजेशन है आपका, क्लियर है।
ठीक है सर।
जैसे
थैंक यू
एमसीक्यूज
सर।
के ऑप्शंस और इनका आंसर मैं आपको अपलोड कर दूँ, ठीक है बेटा।
ठीक है सर।
हाँ, any more query relating to examination, viewers, you are here to discuss with me. Yes, Praveen. And student, please note that please don't hesitate to ask any question here. It is open platform. Okay, if you don't want, I will not take your name. Even that. Okay, student. I think we can end the session here. Now, in the coming class, we shall take up the topic of capital budgeting. Okay, as I told you in the beginning, the topic of capital advanced decision of in capital budgeting. So advanced decisions basically we can say that it can takes a, of course that will be taken by the concerned faculty, of course, and I will be there, and while summing up the session. Now, very important, it is the extension of the topic of capital budgeting you have discussed at your intermediate level. So my request to you, please, if you don't have the idea of the concept of capital budgeting, please bring refer the study material from ICAI website and have a basic idea of the same. Because when sometime I have observed that the student may have not gone through the topic of capital busting at their intermediate level, so they face a very big problem. Or even the topic of capital budgeting will also help you to solve the question of security valuation as well. Why? Because there is a concept of IRR, internal rate of return, that is very used in your capital budget. This is your capital advanced capital budgeting and even security valuation. Because if you recall that in your while we are doing the topic of cost of capital, and we are computing the IRR for the debt, that is YTM. Okay, from the white, basically now here in the most of the question YTM will be given to us, so we have to go reverse way. But you should have an idea how we have computed YTM, because generally YTM in a coupon rate. Coupon rate means any bond may carry some fixed coupon payment. So generally their YTM is different from the coupon rate. It can be higher or it can be lower. So it depends. And generally in the market we compute this YTM. So all these basically concept, some small concept that has been covered in your intermediate level, you should be have a thorough knowledge of the same. Okay, and in the advanced capital busting decision, we shall cover risk plus capital busting. Now here we shall see, because see, when we were doing our intermediate level, we are doing capital budgeting topic. Normally we were presuming that we were ignoring the fact that whatever cash we have assumed, cash flow profit we have assumed, we are assuming that that will remain the same in the time to come. But it is always not the thing. Okay, nobody knows what will happen in the future. So what we have to do, we normally incorporate some risk element there. Okay, so there are some techniques like scenario analysis, simulation analysis, CE approach. Okay, risk adjusted discount rate approach is there. So all approaches will be discussed there. Then there will be a topic of replacement cycle. Now replacement cycle means we have to decide at what point of time we should replace our asset. So all these have been covered in our this topic, capital budgeting, advanced capital budgeting decisions, that will be covered in the next class, and that will be taken by the separate faculty. So my request to you, please, you go through the lectures that is available on the, and note on your queries, even pertaining to that lecture as well. Okay, because we carry the solution with ourselves. Even if you have any query relating to our first and second lecture of the recorded, you can discuss here. Okay, I am free here to discuss everything. So the purpose of this revisionary class is that if any doubt is coming from this revisionary classes, recorded lecture, that you can discuss, or it is coming out from your 1 second, student. Yes, even it is coming out from your 1 second, student. Now, if the doubt is coming from your previous lecture, sorry. Even doubt is coming from your previous lecture, that can also be covered here. Okay. So with this, we come to the end of the session. Student, before one very important point, I just forget 1 second. I just want to share my phone number and email ID. Just अशोक जी शेयरिंग राइट देना एक बारी वो चला गया स्क्रीन. Now, student, if you have any query, I think if any query, especially relating to some student were asking about the adjustment of the interest in a EFR, even we can discuss over for the same. So you can write the email to us sfm-final@ICAI.in, or even you can contact me over the telephone 0120 305 45956. This is my landline number. Of course, I will be there. If I am not available, my assistant will be there. You just note down your details, your name and telephone number. I will contact back to you. Okay, sir. Yes, Devrat, your observation is correct. This bond wala question is from the security valuation. Of course, student, this topic is covered in the bond wala question is in your security valuation question. But if you see my previous recorded lecture, it is a kind of a strategic decision. Okay, or we relating to financial planning. So that's why I have covered deliberately. I have covered here. Okay, but once you, it can be covered both way. Okay, Shweta, thank you for appreciation for the lecture. Okay, student, with this, we come to the end of this lecture and see you in the next class. Meanwhile, if you have any query, you can share with us. Thank you and have a nice day. Two minutes. Let students can say something. They can say. Okay, let me check. Any queries there? मैं query handle में देख लेता हूँ. Okay, I think there are no more queries. Okay, Ashok ji, now session is over. Thank you. Okay.